Here's our video on claiming business expenses. Tax rules are complex and the guidance below is high level, so we recommend you consult with a qualified accountant for further advice. An important part of tax planning is to ensure that you're claiming all of your allowable business expense deductions. You want to make sure you're claiming everything you're allowed while remaining compliant within HMRC rules. The general rule is that you can take any deduction for expenses that are wholly, exclusively and necessarily for business purposes. Judgment is sometimes needed to determine whether an expense deduction fits within that principle, and concepts of fairness and reasonableness are applied by HMRC in making that determination. Take care, because beyond the general rule, some costs like client entertaining are specifically not allowable deductions. For limited companies, you can claim for costs incurred directly by the business or costs incurred by a director or employee on behalf of the business, which are reimbursed. Capital expenditures, typically for machinery and equipment used in the business, are not deductible in the same way as other costs. Capital allowance rules apply, and this is covered in another video. Many small business owners do some portion of their work from home. You can either claim a flat rate of £4 per week for use of a home office, or claim on an itemised basis for the household costs that relate to the business. The itemised route usually leads to a higher expense deduction. This is one area where the rules for a sole trader and a limited company are a little different. A limited company can only claim for household costs that are directly related to the business. For example, the extra cost of heating or electricity to run a home office, and cannot claim for costs which would already have been incurred for personal use, like renting a phone line or a broadband connection, council tax or rent. A sole trader, in contrast, can claim a portion of all household costs related to the home office, including rent and council tax, repairs and cleaning. The sole trader must split the costs between the business portion and the personal portion using a reasonable and supportable method, which is typically a function of space and time. It's very important to keep accurate and complete books and records to support your expense claim, so you do not lose opportunities or risk being denied a deduction. Books and records must be kept for at least 6 years and may be called on by HMRC if they choose to conduct an audit. Keep all receipts and invoices to support expense deductions. We recommend keeping both a physical copy and a digital copy of all receipts and invoices. Both sole traders and limited companies can claim deduction for costs which are incurred wholly, exclusively and necessarily for the business. But there are differences in what and how costs are claimed. With a limited company, you can deduct the cost of running your business from your profits before tax when you prepare your corporation tax return. Business-related costs will be deducted in full from taxable profits, and if a portion of the cost is for personal use or benefit of a director or employee, that portion is treated as a benefit in kind and taxed by the self-assessment process. For sole traders, the business and the individual are considered to be one and the same entity. This is the key difference between the sole trader and the limited company. A sole trader must apportion costs between personal and business use and can only claim an allowable expense for the business portion of costs. Tax rules are complex, and we do recommend you consult a qualified accountant for further advice. At Currells, we'd be happy to help. Give us a call or drop us an email. Here's our video.